Dillon Products manufactures various machine parts to customer specifications. The company uses a job order costing system and applies overhead cost to jobs on the basis of machine hours. At the beginning of the year, it was estimated the company would work 240,000 machine hours and incur $4,800,000 in manufacturing overhead costs. Let's go ahead and calculate our predetermined overhead rate for the Dillon products. Our predetermined overhead rate is our estimated overhead cost of $4.8 million divided by our estimated machine hours of 240,000. We get a predetermined overhead rate of $20 per machine hour. Continuing on, the company spent the entire month of January working on a large order for 16,000 custom-made machine parts. The company had no work in process at the beginning of January, and cost data relating to January follows. Raw materials purchased on account were $325,000. To record this, we will debit raw materials for $325,000 and credit accounts payable for $325,000. Next, we're told that raw materials requisitioned for production were $290,000. When we take materials out of raw materials, we'll do this with a credit. So we'll credit raw materials inventory for $290,000. We're told that 80% of these materials were direct materials and 20% were indirect materials. So our indirect materials will get charged to manufacturing overhead, and that will be the $290,000 times 20%. We will then debit work in process for $232,000. This is the direct materials, which is our $290,000 times 80%. We're told that labor costs incurred in the factory were $180,000. We will credit wages payable or salaries payable for $180,000. And that we're told that 1/3 of this is direct labor, while 2/3 is indirect labor. The direct labor gets charged directly to work in process, so we'll debit work in process for $60,000. The 2/3, which is indirect labor, gets recorded as part of manufacturing overhead. Depreciation recorded on factory equipment is $75,000. Our depreciation recall is manufacturing overhead, so we'll debit manufacturing overhead for $75,000 and credit accumulated depreciation. Other manufacturing overhead costs incurred were $62,000, so we'll debit manufacturing overhead, and we're told that we will credit accounts payable. Item F, manufacturing overhead cost was applied to production on the basis of 15,000 machine hours actually worked. So let's go ahead and calculate the amount of applied overhead. Our applied overhead will be our 15,000 machine hours times our predetermined overhead rate of $20 per machine hour. Our applied manufacturing overhead is $300,000. We will debit work in process for $300,000 and credit manufacturing overhead for $300,000. Finally, in G, we're told the company completed the job and moved it to finished goods warehouse on January 31 to await delivery to a customer. We need to go ahead and record the transfer of these costs from work in process to finished goods. Since this is our only job in work in process, and we had 0 in work in process at the beginning of the month, we simply need to total the amounts of the charges that were debited to work in process during the month. This totals to $592,000. It's the $232,000 in direct materials, the $60,000 in direct labor, and the $300,000 in manufacturing overhead. So as we transfer this job from work in process to finished goods, we want to take the costs out of work in process and put them into finished goods. We'll do this with a debit to finished goods for $592,000 and a credit to work in process for $592,000. Finally, we're asked to calculate the total cost per unit for this job. We'll start off by taking our total cost for the job, which we just calculated as $592,000, and dividing it by the number of units. And we were told in the problem that we had 16,000 machine parts or units in this job. So 592,000 divided by 16,000 gives us a cost per unit of $37.